Hi everyone, hope you're all well. It's FX Pay here from Black Swan. So I just wanted to do a video to showcase a few of my trades from the end of last week and to break them down for you just to show my entry and thought process. So starting off with the higher time frame, as we can see EU has been very bearish in the recent days and weeks, especially with the Ukraine and Russia war. Over to the left here, what we've got is a daily break of structure, and then price had started to pull back to relevant supply ranges in premium pricing. Now, the first point of interest I had was a 15-minute supply level. However, this rectangle box I've marked here is an indication to show that we don't have any structural liquidity to work with. So a good example of structural liquidity is basically what I've drawn here. So as we can see, we've got some actual structure itself to work with, and an ideal structural liquidity play would be to have equal highs or double tops, however you know it as, basically set up there before the point of interest. We would then see mitigation occur and a sweep of the double tops, and then order flow would shift. This is known as the change of character. But because we don't have that, then the setup we need to look for next is this one over here, which is for liquidity to be engineered and taken within the zone itself. So this is known as a fake chock. So this is typically what occurs is price comes in, mitigates the point of interest, shifts order flow, which essentially entices people to start selling here. That zone and price level itself actually gets taken as liquidity, and then we basically get the real change of character occur here and the real entry occur here. If one of these two setups don't occur, what we can expect is the zone itself to be taken as liquidity. And that's precisely what happened here. Is the whole zone itself was taken because price wanted to mitigate a deeper level within the supply range, essentially. And something else to note is we did have a big pool of liquidity over here in the form of trendline liquidity, and we had an unmitigated area of the wick here, which is exactly where price had begun to move from, essentially. So if we take a look at my first trade, basically what we've got is the high time frame mitigation at an extreme supply level in heavy premium pricing. We've also got a sweep of the trendline liquidity previously noted. So looking at this demand range, there's an interaction between the buying and also the selling taking place. And what we can see is demand fails to hold, and we see the first shift in order flow. This is in the form of a 1 minute change of character. So this whole sequence of events basically leaves behind a 4 minute supply zone for us to work with. So now if we scale down to the 5 seconds just to see entry, how that looks like. So basically, because enough liquidity had already been taken, all we needed now was realignment from the 5 seconds to support this trade idea of selling. So looking at the 5 second time frame price action, what we can see is we get the first change of character, and also there's another interaction between the buying and the selling taking place here. So I basically marked up the interaction. So this is the supply zone following on from the interaction, which was unmitigated, which basically caused the actual shift in order flow and realignment. So this is a really strong point of interest for me. One thing we should always note as well is the extreme side of this area is also unmitigated. So you should always consider the extreme. They're always valid, and they can always be played from. So basically, as the 5 second flip zone was unmitigated, I wanted to play the reaction. I should never presume that this is going to hold, because if I set a limit here with a 1 pip stop loss and then the market wanted to go to the extreme, then I would take a loss. Not that losses matter, but we just want to be tactical in this. So I basically played the reaction. So for this type of trade, I basically used a stop order, which I find really useful these days, because like as we can see here visually, we can see the mitigation and this supply order block is respected, but I've also got enough breathing room so that if it does want to pull back a bit and go higher, it shouldn't activate me in the trade. So this is basically how I got entry for my first trade. So hopefully that helps you see the first entry model on this one. Now, moving on to the second trade. Although we was low down in the leg, demand was clearly failing to print higher prices. Now, a really good question to ask yourself is who is in control? It's a great question which can really help you build your trade idea out. So basically what I could see is a supply chain forming and holding, and with the Frankfurt session due to start, I knew that some momentum would kick in. The Frankfurt session started and we had the Asia high liquidity taken out, which I personally use as a confluence, and it's a really great indicator to support your trade idea. This event occurring also mitigated a supply range, and then we had a 1 minute change of character which showed the shift in order flow, which I'll just show you now. So here we can see the Asia high liquidity being taken, a 1 minute change of character which shows the shift in order flow. We then had a further break of internal structure here and further indication that demand was clearly failing to hold. This basically left behind a 2 minute demand zone. Sorry, supply zone for us to work with, and we basically had some trendline liquidity also built to support this mitigation and to also fuel the desired move. So if we break down the 2 minute entry, let's go down to 5 seconds. So basically what we can see here is the 2 minute supply zone was mitigated, a sweep of the internal liquidity to the left, and then we also see the shift in order flow on the lower time frame. So obviously, as we can see on 5 seconds, we got the 5 seconds change of character, and basically this entry was based on the idea of price pulling back into the overall range. So after we saw a further break, price then pulls back into the range, and I basically market executed to also cover the 5 second order block here, which was unmitigated, and also this one here. So this was actually a 3 pip stop loss, which in the grand scheme of things is still a really nice stop loss to have. So that's essentially my breakdown of the second trade. And then I'll just play that out just so we can see what happened. Obviously, after all of these events had occurred, price had done what it needed to do, and it essentially began to melt. It came back for a mitigation and then absolutely tanked down. So if we take a look at my third entry, which was a long, essentially after the sales had pushed into higher time frame discount pricing, and also with structural lows taken to the left, playing a pullback is absolutely possible. However, it's also about being patient and waiting for the right sequence of events. So looking at the breakdown of the long, once the bearish momentum had started to get exhausted, we basically had a 1 minute change of character, which we can see here. Just drop down to the 1 minute time frame so it's nice and clear. And basically from this supply level failing, this actually created a supply to demand flip. So we was left with a demand flip here basically. This is also part of an actual demand chain which we could see was forming and also being respected. So if I get down to the entry now, so basically, yeah, just to recap on that, we had a 1 minute change of character, a 2 minute unmitigated demand zone, which was just about left unmitigated. And if we get down to the entry now, I can just show you this. So yeah, I basically thought that this was inducement here right before the point of interest, and basically that this was a sweep of liquidity. We had the 5 second change of character, so I actually took a loss here, which in my eyes I'd say is a valid loss. But what we was also left was further liquidity here in the form of equal lows. So basically, once I took the L here and I saw that it was still respecting the demand, and I saw a 5 second flip. I basically took an entry here and used the stop order again to basically play the reaction, just to give myself enough room to basically let it get respected and also bounce off. And on this entry here, I also covered the extreme 5 second order block because, as noted earlier in the video, extremes are always valid and should always be kept in mind. So basically then once the long started to take off, obviously at this point in time it's a counter trend trade, so I use the Fibonacci tool just to show the retracement levels, and I basically look to take profit at 50% and above. Now it can come to 38%. This is known as a weak retracement. So as I did have a zone here which wasn't fully mitigated, and some trend line liquidity here which I've not actually marked up, my first take profit was here, but of course we did have a deeper supply zone which was also an option for further partials. So that's essentially my first take profit, and I'll basically just get into another long that occurred essentially. So after taking partials on the previous long at the first supply level, we actually had another opportunity created which was from a demand flip zone, and as price had returned to discount pricing of the M15 leg, I was happy to take this with further confirmations. So what we see is price pulls back to mitigate the 1 minute demand zone, and if we drop down to the 5 seconds now, so we can see the lower time frame price action. Basically, what we see here is the demand zone being respected, sweeps of internal liquidity within this zone, and demand being respected. We can then basically see a 5 second change of character, and essentially at this point I actually had to head out, but because I had enough confirmations with the sweep of liquidity, the change of character, also in discount pricing, I was actually happy to market execute as price had pulled back in here and respected the demand zone, and I just decided to cover the low with a larger stop loss, and that is how I basically caught the long on this trade. And obviously as noted before, this is a counter trend trade. So I didn't want to be greedy and think that this is going to go to the moon. So my final supply zone, which was I was expecting to be respected, which was the extreme of the current M15 range, was this one here. So if I play price out, we can see exactly what happened. So I had a hard take profit at this zone, and we had a V-shaped recovery, and price began to go bearish from there. But that's essentially the four trades that I had in this whole setup. So hopefully that helps, guys, and hopefully you gain some knowledge from these breakdowns. Have a good day, and I'll catch you soon.